great to have you. You know, listen, there's a positive response to the market, though perhaps less than some may have anticipated given those revenue numbers. On the call, your CFO said that you've had better visibility than we've ever had in the past. Now, I'm not sure if he was speaking of specific parts of the overall market or overall, but talk to me about visibility and why you guys feel so confident, because the market may be sort of saying, well, we're not so sure.
Yeah. Well, first of all, thanks for having me, and I want to just thank the entire team, in particular our supply chain team that has worked tirelessly over the last 2 years to try to get us to where we are today. The visibility is created by a couple things. Number one, we've been embarking on this business transformation for the entire time that I've been CEO, and we're now at a point where 44% of our revenue is recurring, and I think that's just not quite understood yet. So if you go back 8 years ago, we would have to take orders in the quarter for roughly 75% of our revenue in a quarter. So you just didn't have as much predictability as we have now. So you've got that. We got $23 billion of ARR. We have $32 billion of RPO, of which $17 billion is going to revenue in the next 12 months. And we have a backlog as we end the fiscal year, post the guidance that we just gave. We have a backlog that's going to be in excess of twice the normal backlog as we exit the year. All those things just give us good visibility. Yeah,
you've said the backlog far exceeds historical levels, even as you're drawing it down. Why? Explain to people why that's the case and what that means.
Well, I think the whole notion that we're actually just draining backlog, our backlog was created by significant customer demand, so it's not like it just showed up. And so we have, and then our order growth remains stable. This last quarter was the third highest Q2 in the history of the company from an orders perspective. So it didn't feel like, this thing is falling off a cliff by any stretch. And so when you combine the RPO and the fact that we have revenue on our balance sheet that's coming off every quarter, with orders remaining stable and with our backlog, we have a high degree of visibility and feel confident.
Chuck, what would you say to those who want to take your results and sort of impose them, broadly speaking, on a stronger than expected economy? How would you characterize things? Because you've been with us any number of times and certainly not been as positive as you have been.
Well, I mean, I've been here when China shut down.
Yes,
we talked about power supplies. I remember that. That's not a lot of fun, but today's a much more enjoyable day to come on the air. But it's, look, I think it's mixed. I think it's very mixed. I think that if you look at the industry segments that we have some like financial services that continue to be strong for obvious reasons. Their businesses are doing really well. Those who have significant exposure to consumer, or they are having tougher times, they're not as, it's not as consistent as you would think. So, but overall, I think when you balance it all out, our enterprise and commercial business grew double digits sequentially. Our public sector business was actually stronger than our historical sequential ranges, so it outperformed, with U.S. federal being very strong. And then our service provider business, effectively, those customers are the ones who built long-term ordering plans, and so as we see lead times begin to come down, they're just going to have different ordering patterns than we have now. So to be in range sequentially on orders at a time where our lead times are coming down significantly, I think that's a positive.
When you talk about 44% recurring revenue, so that's kind of subscription-based software service stuff, what's the life of that? I'm just kind of trying to figure out what the arrangements are in terms of how often that has to be refreshed.
Well, so that number gets reflected in our RPO, and that number, RPO is $32 billion as we exited the quarter, and $17 billion of that will be recognized over the next 4 quarters. So the average on our software deals, they're typically 3-year kind of deals, so that's a rough estimate.
One of the things I remember you talking about last year was the danger of talking ourselves into a recessionary mindset.
Yeah.
And I wonder if you think you can judge at this point whether or not we've done that or avoided it.
Well, it was really funny in Davos, because I told your colleagues who were interviewing everybody there, I said, the only time we talk about a recession is when you look us in the eye and say, are we going to have a recession? And so and what we discussed as the business leaders that were there, we said, look, we control a lot of the emotion around spending. We control the narrative around whether we're spending or not. And if we all decide we're going to go into a recession, then we're probably not going to spend, which then could trigger us into a recession. But one other thing I think is important, I think that the CEOs of today have basically been developed as executives through lots of times of crisis.